Hi guys, welcome back to my channel. In today's video, I'm going to go through some live trades that I've taken over the past couple of days. So today is February 26th. The trade that I posted, or I will be posting, is from Tuesday, February 25th. I just want to go through kind of the risk management on this trade, the psychology behind this trade. It was a profitable trade, but my drawdown, I was down on the play about 30%. So I kind of want to go through my mindset with that and how I was able to hold what I was looking at. So you guys can kind of get an understanding of the trade that I took, the strategy, and obviously how I went about all of that. Now I did post this trade live on Instagram, so if you want to check that out, you can go ahead and look. I record all my trades so you can see me entering and exiting the position, talking to my Discord about it, because I was trading live with my Discord. But I kind of want to just go through, where I set my stop, what I was looking for as I entered the position, and why I held. And I also kind of want to touch on BOOKMAP a little bit as well, and what I saw in BOOKMAP in order to help me stay in that position, what I saw in order flow and volume to help me stay in that position as well. So that being said, like I said, this trade was on February 25th, Tuesday, February 25th on SPX. So like I said, I did trade this live on Discord, so you guys can see we were live. I was watching SPX calls above 6,000 and puts below 59.70. Obviously called everything out, and I'm going to show you exactly why I entered SPX where I did, because my entry was a little bit delayed. So I was watching SPX for puts below 59.70 originally, but I also wanted to see ES futures clear pre-market low. So let's go ahead and open all of that. Okay, so if we go ahead and look at NASDAQ and ES, this is kind of what I was looking for. So both ES and the NASDAQ had trend lines. So they were trending down. So this is the swing high of the trend line, and this was where market opened. So I was looking for both of them to either break the trend line to the upside for an upside move in the market, or for them to reject that trend line for a downside move in the market. As you can see, both futures ended up rejecting that trend line at open. Both rejected trend lines at open, and both cleared VWAP levels at open. Go ahead and look at ES. I'm just going to zoom in on ES here, and the NASDAQ. So NASDAQ's pre-market low was sitting at around 2185, around 21,300. So I wanted to see the NASDAQ fully clear 21,300 with a volume pressure, selling pressure coming into the NASDAQ, and I wanted to see ES clear pre-market low. So for futures, usually when I look to take my initial trade on SPX, or SPY or QQQ, I always want to see, especially if the futures aren't in a range, I'm talking about right out of open, usually my entry on futures is going to be pre-market high and pre-market low. Unless there was a significant level before that, or if it's previous day high, previous day low before that, after that, my entry is always going to be either above pre-market high or below pre-market low, because those are significant levels on futures. So I always wait for those levels to break as well if I were to take SPY, SPX, or QQQ. That being said, ES's pre-market low was 59.77, with the next level down being 59.75 and then 59.60. So you can see that once we rejected the trend line, that was actually a really good place to enter puts either on SPX or SPY, QQQ, because both futures rejected. Now, for me personally, I don't like to take positions right out of open. I do like to wait for a little bit of a pullback. And then on this specific one, you can see that it was actually a really good rejection, because ES right at 630 rejected it and then broke its VWAP. NASDAQ had rejected it prior to market open and broke VWAP at open. So they weren't fully in sync. I wanted both futures below VWAP as well. I always wait for futures to either break above VWAP for calls anywhere or break below VWAP for puts anywhere. If they're below VWAP, I don't necessarily like to take calls, and if they're above VWAP, I don't necessarily like to take puts. So that being said, my initial entry on SPX was 59.70. Okay, so above 6,000 was actually, let me just double check. Yeah, so calls above 6,000 and then puts below 59.70 was my initial trading plan on SPX. Now, if we go ahead and look, this is the break of 59.70 at 950, okay? And if we go ahead and look, this is the 945, it's the 950 candle on ES, okay? So at 945, towards the end of the 945 candle, ES pulled back, okay? And if we actually go ahead and watch ES on the 5-minute, I will show you guys exactly what I'm looking at. So this is the 950 candle on ES, okay? As you can see, this is the 945, 950. So the 950 candle on ES, as SPX's candle was breaking 59.70, ES was still well above its pre-market low, which is why I didn't initially enter at 59.70. Then I completely changed my trading plan. I was like, all right, I'll enter SPX puts when ES breaks its pre-market low. I didn't anticipate, obviously, that at pre-market low we would get a pullback, which is why I didn't enter before that originally, and I kind of overlooked that concept of it. I could have definitely waited for the pullback to happen first before entering. That's another thing that I've mentioned in some of my other videos. When the market opens and SPX or SPY open and it's either a gap up and go or a gap down and go, what you don't want to do is get in right on that initial move, because the pullbacks right in the first 5 minutes, trading 0 DTEs are extremely volatile. So I always like to wait for SPX to either pull back after that gap and go, or to range first before I look to take an entry. That's another mistake that I made here. So I entered SPX puts at 952 once ES on this 950 candle broke through 59.77. So as ES broke 59.77, NASDAQ was still really strong to the downside. Nice strong trend on the NASDAQ. If we go ahead and look on the 5-minute even, NASDAQ was a little bit weaker than ES at that time. So the NASDAQ was giving me the move. ES finally broke 59.77, so I entered a SPX puts at 952. Now, when I did enter SPX puts, I did end up being profitable for the first, couple of 2 minutes in this trade. The premium did move up about $2. The problem is when I entered it, my target was 59.50. So if we go ahead and look, I entered SPX puts at 952. Target down was 59.50 with a stop loss of ES's 59.80. Okay. Now, if we go ahead and look on the 5-minute on ES, you can see that I did break the 59.80 stop loss. But if we move this up a little bit, this is 59.80. Okay. Usually when I set my stop, I like to wait for the stock to actually close above that level before I look to take a position. And I waited for this 5-minute candle to close, and you can see that it rejected. On the next 5-minute open, ES rejected 59.20. It's 59.80. At the same time, ES rejected the 9 EMA. NASDAQ was rejecting 21,300. So remember what I said, NASDAQ's pre-market low was sitting at around 21,300. That's the level that I wanted to see the NASDAQ clear. It retested that 21,300, retested its 9 EMA, and rejected. Okay. At the same time here, SPX pulled back, pulled back to 59.70, which was my original entry point on SPX. Pulled back to 59.70, pulled back straight to that 9 EMA, rejected, and then we ended up getting the move down into 59.50, and then so on and so forth on SPX. I exited my positions at 10:01, closer to 10:02, and then 10:14. So towards the end of this candle at 10:01, and then towards the open of this candle. So I was out 90% of my position as it touched 59.50, and then 10:14, this candle here, I exited the rest of my position. The reason why I exited the rest of my position is because my final target on this play was ES's 59.50. That's a psychological level, so I was comfortable exiting the rest of my position as ES approached 59.50. This is the 10:10 to 10:15 candle, and I exited SPX at around 10:14. My runners on SPX, you can see that I did end up continuing down, but overall was a pretty decent exit, caught a decent percentage of this move down. Another thing that I want to mention is that right now the VIX is pretty high, which means that SPX and SPY's IVs are higher. So what you'll see is that the premium is a little inflated. So usually when I'm trading, I size 60 contracts, 65, 70 contracts, usually around 60. I fat fingered this. I did enter too many contracts. I was in 75 contracts at a price of $19.16, which put me at around $130,000 in this position. So when it pulled back, and you guys saw on Instagram that my drawdown was around $40,000, that still was only around 30% of my entire position. So you always want to make sure that you understand what position size that they're putting into that trade, because that drawdown makes sense. Usually my losses are anywhere from 20 to 30%. Sometimes if I get caught in a really hard rejection, it'll be 40 to 50%. That's very uncommon for me, but sometimes I'll end up holding it just a little bit too long, or my stop loss is off, or the IV is just really high and the premium fluctuates a lot, and I end up taking more than a 30% loss. So SPX was still within that range of what I like to risk when I'm in a position. Rejected that 9 EMA, rejected 59.70, ES also rejected, and the NASDAQ, especially what helped me stay in this position, is the NASDAQ retested 21,300 being a psychological level, wicked back down, retested the 9 EMA, and you can see that on this candle here, volume was low as well. So volume dropped here, and that's what you want to see. On a pullback candle, you want to see volume drop, okay? Volume wasn't high on the pullback, even with BOOKMAP on volume pressure. Volume was still pretty low. There wasn't a lot of buying pressure coming in on BOOKMAP through order flow, so I was comfortable staying in, and then ended up catching the rest of the move down on SPX and making around 40% on this play overall total on the play. So was down about 30%, ended up making around 40% overall on this trade on SPX. But I just wanted to go through kind of, you know, what my thought process was, where I set my stop, and I obviously said my stop was 59.80, but you want to kind of gauge what's happening, and that's why I don't set physical stops. I always set mental stops, and I will say that if you're not disciplined enough to set a mental stop and follow it, don't do that. Set a physical stop. But I always set mental stops because I want to gauge what's going on in volume. I want to gauge what's going on in futures before I exit the position prematurely. And one thing that always helps me when I'm in a position, I'm in a drawdown, or any position that I'm in, even if I'm profitable on that position, I don't like to look at my P&L. I always hide my P&L, and some people are able to do this and some people are not. But for me personally, when I hide my P&L, I'm then able to take emotions out of the picture completely. I'm just looking at my trading plan. I'm just following my trading plan. When you see your P&L, sometimes what can happen is that you're up, you know, you see you're up $1,000, $2,000, you're like, all right, I'm gonna get out, and you get out prematurely. And what happens is you're like, oh my God, I missed so much of the move. You FOMO back in. When you FOMO back in, you take a loss. And then you're like, oh my God, I was up 2,000 and now I'm only up 1,500. Let me take another trade. And then you end up taking another loss, and so on and so forth. And I've done that before, which is why I stopped looking at my P&L. I follow my trading plan. I take my entry where I'm supposed to. I take my profit where I'm supposed to. I always have profit targets set for 80%, 90%, and my runners. I know exactly where I'm going to exit every single one so that there's no regrets. I know where I'm going to exit. When I look at my P&L and I see that I'm up a certain amount, yeah, you want to take the money off. You're like, all right, this is good. I have had enough. But the play is still in motion, and you can still capture a bigger percentage of that move. So not looking at my P&L has helped me capture a bigger percentage of the move most of the time, and then also be able to hold through pullbacks like this where I'm in significant amounts of drawdown, where if I did look at my P&L in this given moment, I more than likely would have exited the position just because of the sheer amount that I was down. I'm not used to being down or taking that big of a loss in any of my trades. Usually my losses are very minimized, and I don't like to take big losses like that take huge chunks out of my profit throughout the month or throughout the week. So that's one little tip. So that's one little tip that I always kind of recommend to especially newer traders, is to make sure that you one, have a trading plan, and then two, don't watch your P&L, because when you watch your P&L, you then become emotionally attached to that trade. And once you become emotionally attached to that trade, at that point the trading plan goes out the window, and you're just basing it off of emotions, and you can FOMO back in, you can FOMO out, you can take bad trades at that point, and so on and so forth. So it's really important that you do that, and hopefully this makes sense to you guys, and why I took this trade, why I put my stop where I put my stop, and what I look for in futures and volume before I look to exit a position as it approaches a stop loss or as I'm in a pullback.